Hi everybody, this is Murugan. In this video I tell you how to invest in stock market, especially when the prices were falling from all-time high. See, stock market may have ups and downs, which is very common, but we should construct our portfolio which can withstand these volatilities and can help us to reach our financial objective as expected and on time. So how do I construct a right portfolio? What it takes to form a right portfolio? Is it all about stock selection, or do we need to review our portfolio on a consistent basis, or do I need to have a right hedging practice? If you ask me, all three is important, but which one is more important? I'll explain one by one as we move forward in this video. And any examples, any stocks I take in this particular video will be with reference to the current market trend, because this video can also help another investor to consider what stocks to keep or what stocks to withdraw from their particular portfolio. Let me begin from this particular things. If you look at this particular chart, I'm talking about Nifty 2019. The recent fall from 12,000 to 10,700 created kind of pessimism in the market. There are a lot of articles I see. People were expecting a kind of recession. The people were expecting a big fall. If you ask me that, Murugan, is it a big fall is expected? Are we expecting a major crash as if like 2008 or 2000s we have seen before? I doubt it, because any big fall generally comes with a kind of evidences. Because if you see around 1999 or if you see around 2000s, any stock for that matter tends to perform well. Doesn't matter it's a good performing stocks, a solid business, or penny stocks, or mid cap, small cap, large cap. The stocks which were not performed for 5-6 years tends to pick up crazily in about 2-3 months. Any stock you name tends to be on 52 weeks high or nearing 52 weeks high, or given a good returns in short span of time. When you see a climate like that, and from there if you see a big fall, a back-to-back crash supported from any trigger, tends to fall like anything, because it is backed by technical weakness along with fundamental weakness. But such evidences were not seen in Indian markets, because you see last 6-7 months the metals were not performing it, banking were not actually giving us good returns, and I don't see NBFCs were not performing it. Murugan, these could be the fundamental weakness. When already people were pessimistic about the markets, you don't see a major sell-off to come from this particular level. So if at all, if any big crash to happen, we want the market to actually witness a good rally on the upside. Only then it comes down. So if your question is to withdraw your existing investments, with this note I tell you not to panic by looking at these volatiles, because look at, I take longer time frame. You see these ups and downs are very common. So these ups and downs are very common in markets. Needless to panic, these ups and downs are very common, but we are not expecting such falls. Okay, now this recent upside downs, we expect the rally to go. Okay, about stock selections, if you ask me, reviewing portfolio is important or stock selection is important, I give more weightage to reviewing your portfolio, not the stock selection. Because if you look at the recent scenarios like Tata Motors, S Bank, India Bulls Housing Finance, M&M, Tata Steel, you don't believe me, I was one who recommended these stocks maybe way back. I've recommended these stocks for many people to be invested, but I'm not forever sticking to this stock. If you see that nobody can judge the Tata Motors performance be way bad, what we have seen about 80-70% fall. S Bank, as a surprise, was one of the best performing stock for a long time, but performing very bad these days. But if you see Kotak Bank, HDFC Bank, which IndusInd Bank, we continue to be investing from a long term perspective. What happened to S Bank? Maybe backed by a lot of fundamental things. But Murugan, as a common man, how do I make sure that these stocks goes out of my portfolio? See, when you review your portfolio, make sure that the stock forms like these bottoms getting higher and higher and higher. When you take about 5 years chart or 7 years chart or a 2 3 years of charts, any recent bottoms should be higher than the previous one. As long as, see, the ups and downs in the price are pretty common, but as long as the bottoms are getting higher and higher, I see there is no problem in terms of holding on to such stocks. So that is one we actually people to advise. But if you look at these stocks today, S Bank, okay, now I'll just take a scenario for S Bank. You see the stocks, when you see the stocks breaking the bottoms, especially about 300 levels, uh, it's better you be on hold mode, not to be on aggressive buying mode. But what happens is people tend to be a buyer when they see a price at such a low. Now people are asking me, Murugan, 59 rupees, damn good stock. S Bank, anytime it can come up. See, I don't even know will the S Bank come up or not. From an investor perspective, don't try to time the market. That's a very common mistake generally people do. When the prices were heading lower and lower and lower, there must be some reasons. Normal ups and downs are fine. Murugan, what do you mean by abnormal ups and downs then? I see back to back lower lows and lower highs. I see some weakness. That's what I get it from market. Does it mean I look only technical? No, I also look at fundamentals, but I can't go in detail of fundamentals. So I just look at the headlines of fundamentals, especially about the transparency aspect of the companies and the consistent returns, the market shares. But technical can also help us to review the portfolio effectively. So if you look at the portfolio now, especially about the stocks like India Bulls Housing Finance, look at the comments, the lower lows and lower highs. If you got stocks like S Bank, India Bulls Housing Finance, Tata Motors, look at the stock which is forming lower, highs and lower lows. This clearly tells me something wrong with the stocks. Even if you take JSW Steel, any stock for that matter. No, JSW was not that bad even when stock was falling from 420 to 260. I was not actually worrying much. But when you look at these recent days fall, especially about last 1 month, it has managed to broke the previous lows and started heading lower. So when we were actually holding the stock for all times, why to actually sell out the stocks from here? If you look at the stocks from here, I see a consistent weakness. So it's better to take the stock out. Murugan, then what do I do with this money which I've generated from this? See, it is better you actually buy another company which continue to be, forming all time, high. So when you see the markets forming, a lower tops and lower bottoms, figure out a stock which forms a higher bottom and higher top in spite of the market weakness. So when you see across everybody talking about negative things, it's not necessary you have to take the money out. Better find a good stocks and keep invested or stay invested. If you think cash is the king, better to liquidate everything. I doubt you started timing the market. That's not the approach an investor do. But Murugan, these days are volatile. Do you expect a quick movement on the upside? I don't think so. But this is the time hedging plays a crucial role. Let's say if you got a stock, let's say you got Axis Bank, you got Asian Paints, you got Infosys, you got Kotak Bank. Let me tell you one thing, these stocks are equally performing. By any chance, if you have diversified your portfolio, you would have already been quite comfortable. By any chance, if you review your portfolio on a month-on-month basis, you will not even feel bad now. You may not even see this video. By any chance, if you are now thinking of timing the market, I request you one thing, that make sure that your portfolio is diversified well, and make sure that a consistent losses are going out of your portfolio. And remember one thing, anytime market falls, it tends to fall quick when it comes to gaining upside over a period of time. So systematic investments are really good, especially when it comes to ups and downs in the market. But when you withdraw your stocks because of their underperformance or some rumors about it, or poor governance on the market, make sure that you give more weightage to liquidate when compared to accumulate. So whenever you buy stocks for thousands and thousands and thousands every day, every month, and you think about selling it like 5,000, so that the stock goes out quickly. But you don't have to trigger the panic button just because the stock falls in a day or fall or any negative news comes in the market. Rather, you slowly see how it actually forms the bottoms. Look at the stock of Asian Paints now, forming a higher highs and higher lows very comfortably. Look at the stock like Infosys. Infosys were not a crazy stock we were looking at it. If you look at 2014, 15, 16, the Tata Motors, Tata Consultancy Services tends to perform way better than the Infosys. But Infosys stock's name were never gone for a toss till date. But there was a management conflict. But especially after the last year, especially the transition in management, I see this stock performance is really good. Every time it forms a gap, managed to sustain. So from a long-term perspective, I think Infosys now looks good from us when compared to other stocks. And these days, look at the defensives are performing really well. Especially we have also recommended Berger Paints now to our investors, and we also recommend Asian Paints. We also recommend people to go with Titan. But remember, now when it comes to Titan, we are holding not an accumulate view. Rather, we ask our people to hold, not even to sell. Why? Because the recent fall from its all-time high makes us to think about it. So if you are an SIP investor, be as a consistent investor, no problem. But we don't recommend this stock as a fresh buy because we don't see a classic higher bottoms, higher top coming up. And you see there is a gap which is not even filled. But we don't actually trigger a panic button now. Rather, we just watch. But any time we see the stock triggering 1150 level, again heading back below 1000, we may ask all our clients to consistently liquidate it. And Murugan, do you have any hedging methods for it? Yeah. Let's say if you have a stock like Titan and you bought the stock for a long time and you hold a good amount of stock, we recommend you to think about covering the you better write the call options, which can actually save a bit, which can reduce your which can give you some premium, which can reduce your percentage loss which happens here. As long as it consolidate over a period of time, the premium what you harvest by writing the options can also optimize your returns over the broader market. Every month it's quite natural that you can look for 1 or 2% additional returns, provided you find the right options. So don't write the at the money options, but don't go far out of the money options. Find the options which carries the high implied volatility, slightly higher you sell it. So let me conclude now what I've explained you people. See, at any point of time we see stocks like now when the markets and everybody talking about the pessimistic scenario, I see stocks like UPL doing reasonably well. Okay, now there is a fall. But if you look at ICICI Bank, if you look at Asian Paints, if you look at Infosys, okay, if you look at Kotak Bank, okay, if you look at Kotak Bank, the stocks were not that beaten down. These are the evergreen stocks. But Murugan, S Bank were also evergreen stock. India Bulls was also evergreen stocks. Tata Motors were also evergreen stocks. That is the reason why I'm telling you, don't stick on to the same stocks forever. Anytime the stocks forms a lower tops and lower bottoms, lower tops and lower bottoms, although whether you know the reasons or not, better you go away from that stocks. As you invest consistently, have a practice of liquidating stocks consistently. I'm not a big fan of buying stock and sticking from a long-term perspective, because nobody knows what's going to be in the game from a longer term perspective. I give you one classic example, Reliance. I was one who recommended Reliance crazily to many people about 4-5 years before. But now, what is my take? I give you some idea about Reliance now. Before that, I give you one stock now. Reliance, not Reliance, about Axis Bank. I'm crazily looking at Axis Bank from a long term perspective. Now, when it comes to Reliance, okay, now look at this. Murugan, as a long term investor, how can I approach Reliance? Look at the Reliance from a long term perspective, it is really good. Even now, I've not triggered a panic button. But by any chance, if Reliance heading below 1000, I may also have a cautious view here. I may also start advising my clients to withdraw things from here. Reliance did really well in terms of business. in terms of geo, in terms of penetration, then Murugan, why are you actually going out of it? Too much of debt? Am I giving importance only to the debt? Not necessarily. But when market pricing the stock way below with all their optimistic business scenario, I have to give some weightage. There is a too much of debt can even put pressure on any good business. So we don't even recommend stocks with a very high debt. But Reliance plan to reduce debt is good because he is liquidating his refinery business, planning to expand towards the digital business. That goes in tandem. But everything is fine as long as the price stays above 1,000. But if I see price starts heading below 1,000, I may seriously consider withdrawing Reliance. Why, Murugan? Because there is a market weakness. Sometimes markets gives us a clue early as possible. This is something which tells me how can I retain a good stocks with me from a longer term perspective. I hope you got some idea about how to review the portfolio. I recommend you to pass your comments at the comment section. If you got any fantastic stocks which can actually build a wealth from a longer term perspective, make sure that you list it below in the comment section. If we also find the stock, we also give you a thumbs up over there. That can help others to review that. And any stocks anybody post in the comment sections, if others have a views, you also reply others so it can become the engagement portfolio. We also like dislikes because it can help us to optimize it. But if you like this video, do share this video, do subscribe our channel. We make sure that you find some interesting video ongoing, but we don't disturb often by posting unnecessary videos. Thanks for watching this video all the way till this minute. Thank you.